Happy Monday out there, folks. This is Darius Dale here to present our macro minute for Monday, March 14th, 2022. Starting with markets, we have stocks up this morning, commodities down, crypto up, dollar flat, global bond yields up. Big news this morning, we got Russia and Ukraine gearing up for more peace talks as Russian missiles hit a Ukrainian military training facility near Poland. That heightens the risk we see some spillover into NATO territory. So, still a lot of two-way risk as it relates to the geopolitical conflict in Ukraine. Big movers this morning, DAX up 3%, copper down 2%, Shanghai Composite, Nat Gas, silver off 3% apiece, and WTI down a full 5%. On the macro front, Friday's release of March consumer confidence data out of the U.S. economy provided incremental support for our dour outlook for U.S. consumer spending. There's a narrative on Wall Street that the Fed is trapped between the current inflationary pressure of the real economy and pending deflationary pressure of the financial economy if they overdo it on rate hikes in QT. We believe that narrative is misplaced, as the economy is likely to slow to a recessionary or near recessionary pace of growth anyway if the Fed allows inflation to continue destroying the well-being of low to median income consumers. So unpacking the data, the headline University of Michigan consumer confidence print for the month of March came in at 57.9, ticked down to 57.9. That's the lowest print we've seen since September 2011. The current conditions, the component ticked down to 67.8. That's the lowest print we've seen since August of 2009. Expectations index ticked down to 54.4. That's the lowest print we've seen since October of 2011. And then taking it to the chart here, what I'm showing in this chart, we have the next 12-month inflation expectation index. That number, that 5.4 number, ticked up to 5.4. It's the highest print we've seen since November of 1981. Where we at here? Boom. And then the current financial situation compared to 1 year ago, that's the blue line in the chart, that ticked down to 94. That's the lowest print we've seen since November of 2013. And then lastly, what I think is probably the most relevant statistic to take away from this report is the expected change in the financial situation in 1 year. That's the black line in this chart that crashed to 92. That's the lowest print we've seen since going back to June of 1979. So that's a really, really long time ago in terms of the impact of inflation on consumers' assessment of their ability to consume, their assessment of the financial situation. And obviously, if your financial assessment goes down, your capacity to consume obviously goes down alongside that. So be aware of all these dynamics. It's not just Russia and Ukraine. A lot of this has obviously been happening for well longer than the war in Russia and Ukraine. With respect to today's probable range setups, overbought signal in the US dollar 2-year inflation swap rate, overbought signal in the US dollar versus the Japanese yen, nothing oversold in the global macro risk matrix. The S&P 500 is still bearish from the perspective of our volatility adjusted momentum signal, with 7.6% of downside versus 4% of upside in its probable range. WTI, neutral VAMs minus 18% of downside versus 20% of upside. So finally, a fair fight there. Bloomberg Dollar Index, bullish VAMs minus 1.8% of downside versus 0.9% of upside. 10-year Treasury yield minus 29 basis points of downside versus 19 basis points of upside. Still bullish VAMs as well. Bitcoin still bearish VAMs minus 15% of downside versus 9% of upside. Ethereum, same deal, bearish VAMs, 15% of downside versus 9% of upside. And then lastly, gold, still neutral VAMs, minus 5.1% of downside versus 4.2% of upside. So a little bit of a fair fight there, finally emerging in bullion. So with that, Darius Dale presenting our macro minute for Monday, March 14, 2022. Best of luck out there this week.